Hi, I'm Eric Peng with Zhongxuan LaSalle Investment in Beijing. In the first quarter of year 2010, Beijing real estate market has witnessed continued growth of investment activities. Here are some of the highlights to discuss. Firstly, let's talk about investment demand, which is strongly resurgent in Q1. Many investors has regained their appetite to start putting capital into the market. Domestic institutions, big occupiers, still dominate the market. Some regional funds tapped into quickly because they have strong track record and good understanding of the market. International investors are also back into the field, began assess investment opportunities, sourcing deals in very active mode. Take a notable transaction, for example, Gateway Plaza. It's an iconic office asset disposed by an international fund. The asset was a Hong Kong REIT product too. It's to be privatized and change hand to a regional real estate fund at total consideration of RMB 2.9 billion. This offering has attracted a huge amount of interest from the investor groups that we just mentioned. A good number of strong bids has been put into the process. In the meantime, this disposition also posed a good question to the market and the regulator that what would be the most optimal risk product for China market. Our Zhongxuan LaSalle research has recently published our Q1 data. There is some interesting findings there. When the rents are still in weak position, we found commercial capital value has actually increased around 5 to 8% in the past 2 quarters, being RMB 33 to 34,000 per square meter for Grade A offices and RMB 37,000 for prime retail on average. This is what we call mismatching situation in the market, which has further compressed the yield, being gross 6.3 for Grade A offices and 6.5 for the retail. This mismatching perhaps is the most interesting prospect of Beijing. Furthermore, we expect insurance investment policies will be reviewed soon by the regulator, which shall further strengthen the demand force. On the other hand, occupiers' requirement has come back much stronger and sooner than widely anticipated. Grade A offices net take-up amounts to 433,000 square meters in Q1, which is about the same of the total of last year. Such the rent and vacancy rate already start to improve. We firmly believe the mismatching situation will be effectively corrected in the midterm. Land price, especially residential land, appreciated significantly, which already resulted in the halting of land tendering. SASAC, along with other relevant government authorities, has recently released a series of new measures to stabilize the market, such as to refine the land tendering regulations, refocus 78 SOE back to their core businesses from real estate, and so on. With such endeavor, we believe it will lead to the improvement of collaboration, professionalism, and transparency for this market. All in all, we believe Beijing investment market will be more dynamic and more exciting. Thank you for listening to us.